Will we have a recession or not? Well, it really depends on who you ask and when you ask. We'll take a peek into the conditions surrounding the economy and the markets in this week's Fastest Four. Hello everyone, I'm John Shrewsbury. Scott is away this week. It'd be very understandable for someone listening to all the economic news these days to just cover their ears and exclaim, "All these voices in my head." Many pundits are issuing recession warnings and saying the economy is headed for a hard landing. Now, others are saying the economy is slowing, just like the Fed would like for it to. But it's not shrinking. Count us in that camp. We believe that there is a big difference in a slowing economy and one that's shrinking. Now, backing up our thoughts is Jeffrey Roach, the chief economist for LPL Research. Jeff says he believes the economy avoids a recession and should grow about 2.6% this year, followed by further slowing in 2023 to a 2% increase. Now, to give you a point of reference, the economy grew at 5.7% in 2021. So there is certainly a slowdown going on. But if you think about it, that is exactly what the Federal Reserve Board wanted. You see, a hot economy produces inflation. And to battle that wildfire, the Fed has raised interest rates. Those rate hikes tend to throw water on a hot economic engine. The trick is to totally not put the fire out, just cool it down a bit. If you're wondering what's exactly fueling the economy, just look in the mirror. It's you, the American consumer. Jeff believes that the strong economic growth is basically rooted in consumer spending, and that will moderate in the face of higher prices, but we will still see enough economic growth on the positive side for the economy to come in positively. Driving that consumer spending is the roughly $3 trillion in excess savings that all of us accumulated during the pandemic. Here's what else. Stores are beginning to rebuild their inventory. Have you noticed that there are more cars on car lots these days? More stuff on shelves? The latest report from the Institute of Supply Management shows that order backlogs are declining for both the manufacturing and service sectors. All this could give economic boost to us a little bit later this year and get us across the finish line at the end of the year in positive territory. Now, to be sure, inflation is still the wild card. We will likely continue to see inflation that's higher than what the Fed would like. But the growth of the inflation will likely cool in the second half of the year. And if and when it does, that's when we give the Fed some room to back off on interest rate increases and hopefully create that much desired soft landing for the economy. So what does all this mean for you and your investments? Assuming that we're right on inflation moderating, that's one good thing for stocks. Second, corporate America is enjoying solid earnings momentum. And as we've told you many times before, at the end of the day, the market always comes down to earnings. Last, stocks appear to be relatively cheap. The market appears to be pricing in as much as a 50% chance of a recession over the next year. But LPL Research actually puts the odds of a recession at less than 33%. If they're right, we could see stocks move higher as the year goes on. Fortune almost always favors the patient. And while this market has certainly tried our patience, it looks like that endurance could soon pay off. That's the fastest 4 minutes in finance. For Scott Inman, I'm John Shrewsbury.